What's up, guys? Phil from Market Rush Trading here, coming to you with this week's watch list. We have a couple of companies on that watch list, like Facebook, Microsoft, Tesla even. They're all having earnings this week, right? So that could send the S&P to 400. That's a price tag that many analysts has been looking for. So I'm going to give you my top 3 stocks, and then we're going to have Will give you his top 3 stocks to watch out for this week, entry points and take profits. So let's take a look at it. Boom.
What's going on, guys? As you can see, this is the other half, Will, of course. Phil is in Florida. I'm in New York. It doesn't matter where you are, you could trade. As long as you have your phone, you have a laptop, you're able to follow news and able to chart, you could most definitely trade. And of course, fundamentals, you have to remember that. But we got some great company in the watch list. You guys would want to stay tuned. And of course, if you want to be comfortable trading, go get yourself some Market Rush Trading merch. What are you doing? What are you waiting for? Come on now. What's going on, guys? This is Will from Market Rush Trading, and right now we will be going over the watch list. But first, let's go over economic data. What does this mean? Those data are what moves the market. Around these 4 things that I have on this list, it will make the market volatile, and I'll show you guys the website that I use in order to track those data and what they mean. First, we do have the Fed speaking on Wednesday. Big Powell, that's the big homie right there. And, you know, it's about interest rate decision and their meeting. So we definitely gonna take a look at that. Not only do we have the Fed speaking, we have GDP input, which we're gonna get into. But second, we have the tech's earnings. And 2 things that we'll be focusing on is their profitability margin, right? And 2, guidance. Will they provide soft or strong guidance for the next quarter, which is the first quarter of 2021? So third, we have the USA and German GDP. Now, what do I mean by GDP, right? GDP is the real gross domestic product. What does it stand for? What does it mean? What does it measure? It basically measures the size and health of an economy. So based on the number that will be provided on Friday, we will know how has the USA economy has grown. And it is really important to the stock market. So it's going to be really, really, really volatile. Next, we have stimulus and focus, which is what's in part 2. We should actually wait the first week of February or 2nd because we need to know what's in there. And it will move the market based on whatever they put in there, whatever they switch, whatever the case may be. We actually want to focus on that, keep that in focus, understand how the market moves, what moves the market, because guess what, right? We can only hope for the best and prepare for the worst. And these things are top 4 things that I have my focus on. And if you guys want to find them out, you most definitely could go to investing.com and basically click on economic calendar at the top. And there you go, right? Tuesday and Wednesday, we have the tech's earning. Let's see what's going on the calendar, which I just mentioned. Everything so on Wednesday for us that we really care about. Consumers' confidence too, that come out on Tuesday, I think. You want to know if people put in more money back into the economy, right? So that's not, if that number is up, then that's pretty good. So we do have crude oil inventories coming as well. You have core durable goods. You know, these moments are really volatile, but are they really that serious? Not really, but they do make sense, and you need to pay attention to that. Next, like I said, we got the Fed speaking, interest rate decision, and press conference. So we most definitely don't want to trade around those times at all. And on Thursday, what we got going on here, we got GDP, right? GDP sales for the quarter 4. We need to understand that. And to top it off, we got the initial jobless claim coming out as well. So it is going to be a volatile market, guys. Be careful. Pay attention to everything. Pay attention to data. Although you might be using the technical, it is very important to pay attention to data that I'm going to trade for this week. First, we got FUBO TV. You guys remember that we played FUBO. We caught this FUBO from here and rode it all the way to $40 a share. We had the nice falling wedge. As soon as it broke that, we flew, right? We flew to $40. We took profits around there. Then from there, we sold off, right? Because there was a disequilibrium between the moving averages and the share price. So now it came back to moving averages. We have a pretty bullish indication happening right there. Purple line is 50, red line is 200-day. Now we have the 50 crossing the 200-day to the upside. That's pretty bullish in my opinion. We could get that push up above 40. If we do break that 40 guess what? We could write this thing all the way back to 45. Real simple, draw support and resistance, draw the breakouts and the patterns that we're looking for. And if we were, right, we could actually see that we have what we call an ascending triangle in a way, right? So what we see in here, we're seeing, higher lows. This is the first low, and this low is higher than the one before it. So now if we could actually break that ascending triangle to the upside, we could actually, guys, test the 45. So that's that with FUBO. Why do I love FUBO again? Do your homework on FUBO. FUBO is taking over. It's taking over the sports fan world, right? They actually had acquired a company. That move we had here from 24 to 40 was because they acquired a betting company. So they enter in that sports world, they enter in that entertainment world, and they betting. And that's what people has been doing the whole COVID. So this is a great stocks to watch. And they just raised their price to $40. So we might actually watch out with that. We have a nice ascending triangle. We're sitting on the 50 and the 200-day moving average. Let's see if we get momentum here on the outside, and we could actually edge a little bit higher. Next, what do we have? We have Big C. This is another one that's on my list. Big C is another one that's on my list. Pretty great setup. What is Big C? Of course, you guys got to do your research, but let me give you guys a few pointers right now. So BigCommerce is the best all-in-one platform with the flexibility to meet the needs of businesses of all kinds, of all sizes. So it takes what Shopify, Etsy, and it gives you more, right? So it's an all-in-one package. It's really a strong force within that industry. So guys, definitely take a look at it. Some pros and cons. It supports multi-channel sales. It supports multi-channel sales. It can accept international payment. And they give you a 15% down. Definitely looking, but the technical is, ever since this company IPO, guess what? It sold off because that valuation was not supported by anything. It's a great company, but we have Etsy, we have Shopify, we have Amazon, and we have all these things in place. So it came back, it humbled itself. We have a nice falling wedge, and now we're looking to see if we can break these levels here. So if we could break out of the falling wedge, we could possibly test these levels here, guys. But now what we're seeing is the 200-day is playing as resistance. So we might actually see price come back here one more time in sort of what we call an ascending triangle once we're breaking out of that falling wedge. But in fact, if we can regain status above 74, 75, we could test these levels. Catching them first momentum was the MACD crossing the signal side, which is a very bullish indication. The second bullish indication is when the MACD crosses the mid-center line to the upside. We already see that this thing is already at an overbought level. So let's actually check the daily chart for it. Let's see what we see on the daily chart. Let's see if we could get something out of that. Yeah, man, we got some great game happening here. Look at the MACD just crossed the signal to the upside here. We're catching some momentum. RSI is like below 51, but it was literally at 34. You know what I mean? So we basically have much more momentum to the upside, guys. But wait for that break above 74, 75. We could possibly take this thing to the 50-day moving average and possibly regain all these highs that we've sell off. So this thing is really good. It basically, they have unlimited storage, guys, unlimited storage products. And all their plans let you sell on Facebook, Instagram, eBay, Amazon. They even let you add a blog to your e-commerce website. You could upload products in bulk. You could connect to more than 65 payment gateways or systems. So this company is going to be big. It's going to be big. And I don't want to sound so biased on it, but I feel like they're going to be so competitive as to where they steal some market share from Shopify or probably even from Etsy. You know, so definitely do your due diligence, take a look at it, but this thing has a great setup. It has been selling off, and I think it found a great support at the 57.26 level. And I think we could actually edge a little bit higher, guys, a little bit higher. So most definitely take a look at it. We might have this next pullback to these levels, but it still should be a higher low than this one here, because right now we're testing the 200-day. If we can hold that 200-day, we could push above 74. Guess what? We more than likely will be touching the 83 levels and possibly within the next few months. And I could only imagine their profit margin. Incredible, incredible. Open the books, open those financials, find value, find growth, because this is the next Shopify. This thing should be trading at $100+ within the next couple months or so. We will be seeing that there. And if any investor out there knows fundamental analysis, you know technical analysis, you know this is a bad boy here. And this is a great stock to hold as well. A great stock to hold. It's pretty cheap right now. Last summer, around 60, 70 bucks. And now look at Etsy, over $200. So most definitely do your research on it. And let's get to it. But that is it, guys. Thank you for listening in. This is my watch list for the week. We traded this thing. I have a pretty nice position on this thing ever since at 58, and I got a second position at 62 bucks a share. I'm picking up in increments, right? Never put all your eggs in back. So this is a great stock to own. Most definitely should do your research on this one. And that is it for today, guys. And most definitely go get your Market Rush Trading merch. You need to be trading comfortably in your own home, wherever you are. If you have a phone, if you have a computer, you're only one trade away. So don't stop learning. The moment you stop learning, you stop growing. So most definitely, guys, thank you for listening in and tap in with us. Go follow us on Instagram and join our Discord group, guys. Most definitely join our Discord group. There's tons of information there for beginners. But see, wherever you are trading, right? But most definitely, thank you for listening in, and I'll pass it on to Phil.
All right, guys, the first company that we will be looking at on my watch list is Microsoft. So with Microsoft, Microsoft does have earnings this week. They do. Overall, I'm bullish on it. From a technical standpoint, I'm very bullish on it due to a certain formation that we'll be taking a look at. So just looking at on the 4-hour time frame, right? The 4-hour time frame, this was a good trade actually, and we had a double bottom here, right? Which I did catch with a breakout above 220. We had a double bottom here, and if you guys don't know what a double bottom is when price hit a certain support at the same price range, well, not simultaneously, but when it hits around the same support. So we had price hit support here on January 6th of 2021. We had a bounce here, got rejected at 220, and then we did come down for it to hit that same support level again, and then we had our second bottom here, which propelled price way above 220, which was the resistance back then. It broke above, and this thing had a nice run to at least 230 this week. So right there itself, even prior to earnings, we have a nice technical momentum here with the double bottom. Now let's take a look at it on the daily, right? So let's go ahead and erase that. What I like on Microsoft on the daily is this uptrend support line right here that it's been on since April of 2020. Yep, actually May of 2020, right? You've had price, steadily go up, and we've been having some rejections at the 225, which is resistance. So let's just go ahead and draw that to that resistance level right here at 225. Right, so you have resistance at 225. Whenever price comes here, it keeps getting rejected, but it always comes down to the trend line support. And as you can see, it keeps hitting that support area multiple times just to go back up, right? And this whole entire formation, right, with the resistance and the support trend line is giving us what we call a ascending triangle, which is a bullish indication for a breakout for a stock. So from a technical standpoint, looking at this ascending triangle, which has been forming for, I would say, for about 6 months now, yeah, it's Microsoft is looking very bullish to me. They did get a price upgrade prior to their earnings, which is a good indication for companies when analysts give them a price target prior to their earnings. So I do have a price target of, well, I'm going with an analyst price target, but with my own price target is 240, although the analysts gave it a 260, right? But just to be conservative, having my own price target is 240. But entering the trade, entry point would be 225. Actually, above 226 would be my entry point, and my first take profit would be 230. That's about a $4 move. And then my second take profit would be 232. So that's a $6 move on the second price target. So entering that trade, above 226. My first take profit, like I mentioned, is 230, and then my second is 232. But well over those price targets going into earnings, I do have a good feeling that Microsoft is going to beat. I don't necessarily play earnings because it's 50-50, but we could definitely trade Microsoft above those 226 with those two price targets that I have just given you. So looking at the overall formation, like I mentioned, we have Microsoft on an ascending triangle, which is a very bullish indication for a major breakout. So I am expecting that with Microsoft. And looking at the RSI, it's not too overbought. It's currently at 60. It could come back down a little bit, which I am expecting, right? But overall, I do like the way that price closed on Monday, which was above that 225 resistance, which is a very good indication. So we might see a little bit of consolidation here prior to earnings before Microsoft takes off. So definitely my top one on the list, other than Facebook, which we'll get into. But this is my top one right here. And looking at the MACD just recently crossed the zero line, turning bullish on the daily. So I'm really liking the setup on Microsoft. So let's go to the next one. This one is. All right, guys. And for our second company, we'll be taking a look at Best Buy, ticker sign BBY. So we all know Best Buy. And just looking at Best Buy from a technical standpoint, it did have a big sell-off here from 120, where it gapped down to 113, and then basically continued to rally, all the way down to 90. Wow, 99 actually. And we did find support at 99. If I go ahead and draw my support line here, we found support here at 99, where we were able to break above. And now we're right back near that drop. So we're right there at 114.93. So what I like about Best Buy is that cup and handle formation, right? So a cup and handle formation is a bullish formation, right? Where you see that the price currently forms the bottom of a cup, and then you'll have the handles on the side, right? So let's just draw that bottom of the cup right here so you guys can see it. Right, so boom. So this right here, you can consider the bottom of the cup. Let's just make it a bit smaller. Well, I don't think I can make it any. Okay, so there it is. So you have your cup right here on the bottom of the cup. Don't mind the cup, it's an ugly cup. But if you go ahead and draw the handle, you'll see that the handle is right here. Is this little formations right there, right? So if I circle that, boom, looks like an exact cup, like a teacup, right? And that is a bullish formation. And this is what I like about Best Buy from a technical standpoint, is that bullish formation of a cup and handle right there. So with a cup and handle, you have to have, it has a breakout point, right? So just erasing everything here. Let's go ahead and put our resistance line here. Our resistance line is about right over here at 115.23, right? As you can see, this is where that first resistance was during that fall from 215 prior to the first time, right? And then we had this whole formation here, and now you can see prices consolidating right above that resistance point, where it's hitting 115 and 111, right? So just to draw that over here so you guys can see, 111 is the support. Let's put that in blue. So 111 is the support, and 115 is our resistance, and that is going to be our breakout point for this cup and handle right here. So let me go ahead and put on my alert above 115. Let's say above 115.50, right, is going to be our entry point. And that's where I would want to get into Best Buy, and I want to ride it all the way to 120. Why? It's due to this gap that needs to be filled. One thing about me is that I love trading gaps, because 90% of the time price comes back to those areas to be filled. Right, so you have your cup and handle formation here, a very bullish indication, and you have your candle currently forming. That's usually when you would want to position yourself within the trade. If you want to enter the trade prior to the breakout above 115.50, I would say you get in now, but do have a stop loss at 111, which is a support. If it were to break that support, then that current cup and handle formation is no longer valid. So you want a safe entry, which would be a break above 115, and I would want to take profit at 119.94, probably 119 flat to be safe. It's about a $4 move on Best Buy, but overall I am looking for price to fill up the gap above here between 117 and 119, right? And not only that, let's look at the SMA. Looking at your SMA, my blue is my 20-day moving average, and my yellow is my 50. You do see a mild bullish crossover happening here between the 20 and the 50. It's called a mild bullish crossover because, well, a mild golden cross because it's the 20 crossing the 50. Actual golden cross is the 50 crossing the 200. But in this case, it's mild because the 20 is crossing the 50. So we have that formation here occurring. So we might see a little bit of consolidation here for a while. But overall, I am expecting Best Buy to get that momentum, that push to the upside due to this formation of this cup and handle right here. And we do have a nice solid support that we did establish at 99. So I do doubt that price will come back below to those support. So yeah, that's pretty much it for my watch list. Will be going into his watch list. Well, he has already gone into the watch list. He gave you the economic data and he gave you his entry point and take profit. Do be careful in the market throughout this week and make sure you trade your entry points. You do not get, be greedy, take profit. You never go broke taking profit, and we'll see you on the next one. Happy trading. Thank you for watching. I hope you enjoyed and learned a lot from the video. Go ahead and smash that like and subscription button and follow us on social media for more content, and stay tuned for the next video.